Welcome everyone, this is Scramble from Emotionless Crypto Trading. Today we're going to talk about Bitcoin as usually and the most important details of the market. There are some great details out there from technical perspective on the probabilities of BTC price and the entire movement of the crypto space for the upcoming days. We've got the technical analysis which helps us understand the language of the market. So we've did it and we're ready to share with you in order to understand the language of these details. Great, so before we touch that, I'd like to share with you what's happening in the weekend. 24 hours volume right there, it's below the average, $26 billion, which is considered, I would say, normal for the weekend time because some of the exchanges are not working with the deposit feature, right? So that is one of the issues that we could consider for a lower 24 hours volume rate during the weekends, 26.5 billion. However, the rate that is considered as low volume has been increasing, has been going more than double in the last 2 months. It's 26 billion, 25, 27 billion right now. And it used to be even around $10-12 billion for the bottom volume as average, right? So that tells about the crypto space, how it's shifting its levels. Market cap $140 billion because we had the altcoin market picking up some great numbers all around the corner, while BTC, of course, has no ability to keep up with the entire increase of the alts. So whenever we're going to have some great days, bullish times, BTC dominance is going to fall below 20%. As well as we would say when we touch all-time high positions, BTC dominance is going to be way lower than 10% compared to the alts market. Great, so let's get back to our job. What we're going to do first is we're going to run through the news of the week, of the day, of the weekend to see the most important details. One of the things that I've pointed out is all around Binance coin, which triples in value in 3 months. And we were checking that one of the reasons are, of course, the very, very highly expertise team behind Binance coin, which is behind the Binance cryptocurrency out there. Usually the audience and the community is calling it the best executing team in the crypto space, and is widely used by Binance users to pay for the exchange's trading fees. It also become a popular medium of exchange for ICO users, as the coin allows startups to raise money by listing on Binance. The exchange is one of the most liquid trading platforms available, handles around $1 billion in trading volume every single day. So there are some specific reasons why a Binance is taking advantage of the market. I've checked the price, it's $16 and it used to be right here below $5. So it's definitely 3x in about 3 months and a few days, which reminds us that it's still possible even during a bearish market to go 3x, to go 5x, to go 4x, to go 10x sometimes for some lower cap volume and cryptos increase in such a period. It's still possible. We used to forget the taste of the 5, 10, 15, 20x periods. Remember back then in 2017 we had those days pretty often. Now we can see that in 2019 one big cap cryptocurrency is starting to roll over and it has 3x in a bearish market, which says something. I can tell you that when Binance is going to introduce their rule more often and at a higher level, that being said, the company, let me just find it where they have listed the company, with the company plans to spend 20% of each year profit to buy back and destroy Binance coin. A steady rise in demand is expected. The mechanism also allows Binance to stimulate equity in the company without the same constraints of issuing stock, right? So they buy back every single year with 20% of the profits, the tokens from the exchange, which is permitting, and then of course burning those tokens, which is permitting the cryptocurrency to gain value. The next thing that is pretty important is going to be around an exchange which announces it can now trade the untradeable. We've all heard the phrase bank the unbanked, but today DX Exchange, a digital asset exchange, unveiled that they're now open to trade security tokens, allowing millions across the world access to trade a market. Earlier this year, the company started to trade derivatives of real-world stock, which allowed those who could not often afford to invest their money in big companies such as Apple or Facebook to buy part of a share using a digital format. Joining the stocks today is the ability to digitize security tokens. These are the tokens that are tied to real, traceable assets such as real estate or investment platforms, making the exchange a one-stop shop. Which brings it to the next level, of course. Cardano volume almost double. Coinbase could trigger a rally. Well, rumors are going all around Coinbase and Cardano that it might be imported or it might be added up to Coinbase. Therefore, there could be a spike over Cardano. That's something to consider. But on the other side, I like to talk about the rumors perspective, which are also influencing the prices, because some people said that nowadays news are not saying anything on the prices side, which is pretty false. As long as the news are enough powerful, they can move the market because they move humans into specific actions, whether that's a good or bad thing, like buying or selling. It has the ability to move people. That's why the news are created, in order to inform people, and that information can move the action of someone, right? Very simple. That's how it is. Love it or hate it, Justin Sun's Tron is winning the D-App war hands down, right? So the decentralized app war hands down right there. Take a look how Tron outperforms the Ethereum and EOS by miles. $180 million in weekly transaction volume for USD on Tron compared to 100 million and 25 million Ethereum, right? So the battle is dominated by Tron. From this perspective, they had 207% increase on weekly transaction volume, surpassing the sum of EOS and Ethereum altogether, of course. Great thing. So let's just get back to our technical analysis, and we will start with a 4-hour candlestick. We're looking at BTC paired up with the US dollar, and we remember we had this representation of rectangles a couple of days ago in my other video presentation. This is the 4-hour, which allows us to look at the charts on longer term. We can see that rectangle number 5 is still continuing to be bearish as long as we're not going to break out of this one, which is our top at 4,300, around that range. Once we break out of that, we will have to change the color of the rectangle, which makes total logic. On the other side, what we have as supporting movement, that's from rectangle number 4, from the starting point of rectangle number 4 until now, is this support trending line, which stays up just like that, and it continues pretty nicely. Therefore, we were able to confirm right here just a few days ago, like 3 days ago, we did confirm on the line once again, and from there we had spiked. The reason for that is, of course, traders have reacted positively. They purchased long because the market didn't have any sort of breakout on this trending line. Once we have supports on the trending lines and confirmations, we do have to purchase long, right? So this is the situation what we have, and we would have to talk about this one more closely. This is the most interesting part of the video presentation. We're going to start from left to right. Massive rejection, good for bulls. This is what happened on 19th, a few days ago. Now that kind of candlestick and of course shadow of the candlesticks is appearing right here as well. This is the second one. Massive rejection, good for bulls. By the way, we could say that this is the third bottom, and I'll explain it to you in a moment. Right, so that type of rejections are telling us the fact that the ones that are looking to buy into the market and they're looking to go long are finding those prices where the market have been rejected, so wherever the shadow is appearing, as a very good entry, right? So they see that as a very good entry. While the bears are no longer see the market going down the way towards, and they give up selling. So the ones remaining in the game are like the bulls, pretty much alone, with very low volume from the bears. So they had the ability to push the market back up and continue with the market towards in their own direction, which is upwards. That's why we see after this type of shadows an increase in the price. Look at that. It's an increase there, and from here as well, it's an increase. Alright, so we can see that considering the fact that it's a point that triggers the bulls market. Now, we're not talking about that type of bulls market which goes all-time high from whatever price point. We're not talking about that kind of thing right now. We're talking about short-term positions because we're looking at 30-minute candlestick. If we would be in the 4-hour or 1-day candlestick and we would see something like this, the story would have been totally different. But now 30-minute talks about days as a ratio perspective. Right, so let me just get back into this. That's about the shadows. But we can also see some other things strictly related to these shadows. We've got 2 points here. This is point number 1. And it tells me that it's connected with this point. And I just made a new line which connects it with this point as well. Right, so we have 3 points connected just like that. Here I've set double bottom starting point of our uptrending channel. Well, I could say right now, because I'm seeing it a lot better, and I recognize the third bottom which appears right here. So we've got the first one right here on the left side, second one right here in the middle, and then the third one on the right side. This gives us the pattern of triple bottom and it's very powerful bullish movement. Although from the second bottom already it is pretty powerful, and the reason for that is take a look at the bulls movement here. You see long green candlesticks dominating the market, at least for the short term. They do that, right? So that's one thing scenario. On the other side, we've got this green line that you can see, and it says it's called resistance line right there. We can see how it has a few confirmations here, and then we've got right there a shadow which tries to force it as a breakout, but it fails. Then the market tries once again here, and it's actually the place where the breakout is confirming, and we've got a very nice entry point just right there where the previous resistance line becomes our next support, and from there we're actually out of this triangle and ready to spike towards after triple bottom. In a nutshell, this is how we have to consider this type of chart. Triple bottom, breakout of the resistance line of the triangle, ready to go towards. Because we also have on the retest, which happens after the breakout, the market is retesting the line in order to see if it's a false or not. It confirms that it's not a false, it finds support on previous resistance, current support line, and then it spikes. Right, so that's exactly what happened. Look at that. It spikes towards and keeps going like that. Can't even feel the resistance that appears here between this zone. It's actually 4,000. What's that? Like $30 up to 4,045. There is a resistance zone applied starting from the stop here. Now let's get back to our triangle, because you see it has a baseline this support line, that's the baseline, and here we have the top line, which is the resistance line. Now, there is a line here talking about why this is not a descending triangle. Because usually the descending triangle pattern has the top line falling, which is the resistance, but one of the things as characteristics is that is forming lower highs, and of course it's oriented in a downtrend direction. The bottom line needs to be pretty straight towards, but I would say horizontal, right? So very simple. The thing that we could see here and why we don't have a descending triangle during our chart is because from where do we enter in the descending triangle is the big question, right? So where do you enter in the triangle? Here we can see that it enters from the top. You can see the starting point of the candlesticks and it just goes down the way. Well, it tells me that we're not entering from any other place other than the top. Great. Looking at this triangle, I can see that we're not entering from the top. We're entering from the bottom into the triangle. And the entry point is somewhere here, right? It just goes like, it falls down and it goes up. But the entry point is definitely from the bottom side. It's not from the top. If it would be from the top, we would have to do something like this, right? So that would be from the top, and that would complete the pattern of descending triangle, because you know what we have at the end of a descending triangle is a breakout on the support line, right? So here it's exactly on the opposite way. It's breaking out on the resistance line. And I've explained to you right now that you have to be very careful looking at not only trending lines, that the support line must be horizontal and then the trending line must be oriented down, forming lower highs and a downtrend. That's not enough for a descending triangle to, that's not enough for a triangle to be called or to be considered as a descending triangle pattern. You also have to look at the entry point where the market enters into the triangle. So if it enters from the top, then it's right. It's a descending triangle and the probabilities are for the market to fall down, to break the support line. But if it enters from the bottom, attention, then it's not a descending triangle. That tells us we have to be very careful at every single aspect when we look at the patterns. Extremely careful at the aspects and little details because they're making the difference. You see, here the starting point is making the difference. Other aspects, other elements are pretty similar to the descending triangle, but if there's something that is not out of the descending triangle pattern, then it's definitely not. It's like it can't be 95% descending triangle, 5% is not out of it, and then we call it like that and we consider like that. It's not that way, unfortunately, and it's not that easy. On the other side, what's happening towards is pretty beautiful. We had the pullback and it's here. This is the pullback. It is also noted down here. Market confirmations on the previous top, very nicely. Something what we have expected. That was a very nice entry right here. We had the previous top located here and it represented resistance, but for now it does show up as support very nicely. The market was traded above, so the only way it could react is as a support, and that's exactly where the pullback has been stopped from the rally. It's also a natural movement to have pullbacks from rallies, even from this type of rallies, which are representing from the breakout about 5%, 4 to 5% on the BTC side. Like I said, alts had anywhere between 8 to 10% average during this rally. Great, so now what we do is do the confirmation we had on the support area. Now we're trying to force once again, and the dangerous area is going to be where the circle is located. So if we touch that, we would have to expect resistance from the rally top, right? That's one of the things that would have to be very careful around that. If the resistance appears, then we're forcing and we're creating double top, and it's pretty risky to hold your trade still open if you're doing day trading, if you're active on that, because the market has the probability to fall down from there. You know what we do here is we're reading the charts and sharing with you the probabilities in a way for everyone to understand it. We're not trying to overcomplicate things. We're not trying to share with you the entire process of technical analysis, which also includes easy, medium, and I would say difficult level. This one is purely limited at easy level of difficulties in order to make it as logical and understandable as possible for the entire audience out there, and hopefully even for the ones which are not having the technical details as a skill set, they would understand what the market has to say. Great, so this is the situation that we have right now during the charts. These are the most important details, in my opinion, that we would have to consider for the upcoming period. That's where the resistance could appear and the support could appear here. So right now we're somewhere in the middle. We just have to see how we're setting towards and how we're pushing it towards, because right now there's the higher low formation going on, and the market is of course not representing any sort of volatility during the weekend. That's usual. Like I've said, some of the exchanges have turned off their deposit, and usually things are pretty slow down during the weekend. Great, so that's pretty much all about this video presentation. Feel free to hit that subscribe button, and then next to you got the bell. You can click on that in order to get notifications whenever I'm posting. Make sure you like the video, you react to it in the way you think you have to do it, like liking or disliking, then push some comments into the area. I would definitely appreciate your feedback onto this. And I guess this is all that I would have to say as the most important detail. Thank you so much, and I'll talk to you soon.